Hey everyone, welcome back to the channel. Today we're taking a deep dive into AeroVironment, ticker AVAV, which experienced a dramatic drop on March 10th, 2026. During regular trading hours, AVAV fell about minus 2.52%, but the real shock came in after hours trading, when the stock plummeted nearly minus 9.71%, reaching around $201. So what's behind this drop? What does the company actually do? And what does this mean for investors, especially given the current geopolitical tensions? Let's break it all down. Why AVAV dropped. The main trigger for today's sell-off was the company's fiscal Q3 2026 earnings report, released after the market closed. And the numbers disappointed investors across multiple fronts. Revenue came in at $408.1 million, falling well short of the $488 million consensus. Adjusted EPS was 64 cents, also below the estimated 72 cents. But the story doesn't end there. Management also slashed full-year guidance. Adjusted EPS is now expected between $2.75 and $3.10, down from the previous range of $3.40 to $3.55. Revenue guidance was reduced to roughly $1.90 to $2 billion, signaling slower growth than previously expected. Adding to investor concerns, AVAV recorded a $151.3 million non-cash goodwill impairment in its space segment. This was tied to a stop work order on the $1.4 billion SCAR satellite program, which was previously expected to be a key driver of growth. Management cited timing issues and government funding delays as key reasons for the underperformance. When you combine missed revenue, EPS, and guidance, along with the impairment charge, it's no surprise the stock sold off heavily. Analysts and investors alike were caught off guard, triggering a sharp decline in after-hours trading. What AeroVironment does. To understand the stock's long-term potential, it helps to know what AeroVironment actually does. AVAV is a leading American defense technology company specializing in autonomous robotic systems that operate across air, land, sea, and space. On the air side, AVAV is known for its unmanned aircraft systems, or UAS, including small tactical drones like the Raven, Puma, and Wasp. These drones are widely used by the military for reconnaissance and surveillance missions. The company also manufactures loitering munitions, most notably the Switchblade kamikaze drones. These drones are portable missile systems that can strike targets with high precision. The Switchblade series has become particularly popular due to its mobility, affordability, and rapid deployment capabilities, making it highly suitable for modern conflict zones. In addition, AVAV has expanded into space and cyber capabilities. Following its 2025 acquisition of BlueHalo, the company now offers satellite communications, directed energy, and AI-driven sensing technologies. This puts AVAV at the intersection of several high-growth defense markets, including space-based defense, cybersecurity, and autonomous warfare technologies. Opportunities amid the U.S.-Iran conflict. Now, let's talk about the geopolitical environment, which is especially relevant right now. The ongoing U.S.-Iran tensions have created both significant opportunities and notable risks for AVAV. On the opportunity side, conflict-driven demand for defense technology has surged. There is a strong need for attritable drones, essentially lower-cost drones that can be deployed in large numbers, and counter-UAS systems to defend against potential Iranian drone swarms. AVAV's products are particularly well-suited for these scenarios. In fact, the company ended Q3 with a record $1.1 billion funded backlog, reflecting strong future orders from the U.S. government and allied nations. The heightened demand for drones and autonomous systems could provide AVAV with sustained revenue tailwind, especially as defense budgets continue to grow amid geopolitical uncertainty. Analysts have even described the situation as a goldmine for companies like AVAV, given the increased reliance on unmanned and autonomous systems in modern warfare. Risks investors should consider. However, there are risks that investors need to be aware of. One major concern is contract uncertainty. The U.S. Space Force has reopened bidding for the $1.4 billion SCAR satellite program, which was previously expected to contribute significantly to AVAV's future revenue. This introduces a degree of unpredictability for the company's top line. Another risk is margin compression. Integrating Blue Halo and dealing with an unfavorable product mix has dragged gross margins down from around 40% to under 20% in recent quarters. This is significant because margins are a key indicator of the company's profitability, especially given the capital-intensive nature of defense technology. Finally, broader defense sector sentiment has been uneven. While the conflict could drive demand, some investors worry about the concept of forever wars, conflicts that may not immediately translate into strong profit growth. This fear has caused other defense stocks to struggle as well, contributing to AVAV's volatility. Analyst price targets. So, where do analysts see AVAV going from here? Following the Q3 miss, several analysts adjusted their price targets, but the overall outlook remains cautiously optimistic over the long term. The consensus average target sits around $333 to $348. The high target comes from Needham at $450, while the low target is UBS at $259. Notable recent adjustments include Piper Sandler cutting its target to $290 from $391, Canaccord down to $330 from $400, and Baird lowering to $260 from $350. These wide ranges reflect the uncertainty around near-term earnings and program execution, but also highlight the long-term growth potential given AVAV's product lineup and strategic positioning in drones, space, and autonomous systems. Final thoughts. In summary, AVAV faces short-term challenges. Earnings misses, program delays, and margin pressures have clearly impacted the stock. But the company's strategic position in drones, loitering munitions, and space technologies, combined with heightened geopolitical tensions, offers long-term growth opportunities. For investors, this means AVAV is a high-risk, potentially high-reward stock. Monitoring developments in major contracts, government funding, and geopolitical events will be key to understanding how the stock may perform going forward. That's it for today's deep dive on AVAV. If you found this analysis helpful, don't forget to like this video, share it, and subscribe to the channel for more stock updates, market insights, and investment analysis. Thanks for watching, and I'll see you in the next video.